and gentlemen, absolute pleasure and delighted to be with you in the lovely city of Port Elizabeth this morning. I've been here in the last 5 years, just once before. It's always a pleasure to come to the windy city, is it? Yeah, I just picked up a bit of a bug last night. I think coming from a warm Durban, I picked up something. But just by a show of hands, if I have 250,000 rand in my pocket, or checks, there's no checks nowadays, unrestricted core funding, how many of you would say no to it? Any hands? I hope that would have been the case. My name is Ridhwaan, I'm the Tax Director of Turning Point Chartered Accountants. I've been consulting to the NPO sector for the last 20 years. I know the colour of my beard doesn't say that, but it's been the last 20 years. And the next 15 minutes, I do have my timer on. I'm not going to be your tax advisor, nor perhaps your accountant, but I'm going to be your fundraiser. Because sitting at the end of the SARS rainbow is a pot of gold worth R1 billion annually. R1 billion. My team recovered in the last 15 years R1 billion for our clients in a number of different taxes. 1 billion, 9 zeros. Now think of the impact R1 billion could do to the sector. Okay, so in the next few minutes, I'm going to perhaps maybe give you some background about why 30 to 40% of your budget is exposed to VAT, just one tax. I don't have more time. 65% of NPOs in South Africa have yet to even start accessing those monies, and perhaps maybe leave you to go back and ask the hard question, is my organization losing monies, and what can I do about it? Okay, so let's start with some hard reality, which I like to call the hidden funding gap. Our research shows that 30 to 40% of every rand spent by an NGO does get attracted to VAT. For profit-making organizations, that's much larger, and it could go at a much higher percentage. But for non-profits, we're looking at 30 to 40% of every rand is exposed to VAT. And this is generally examples like rent, electricity, water, program cost, assets, whether it's fixed assets or movable, are subject to VAT. And you're not exempt from VAT. So when the Mandela Bay municipality issues you an invoice for water and delivery, VAT at 15% is charged. And if you're not registered for VAT, that's an extra 15% on your, on your cost of service delivery. If you are registered for VAT, you possibly can claim that cost back. Okay, let's look at the problem, however, that we have. 65% of NPOs in South Africa who can qualify to register for VAT are not VAT registered. We've got this figure from a number of different modulations that we've done based on SARS data, parliamentary reports, and some DSD statistics as well. 65% not VAT registered haven't even started accessing the funding. Out of the 35% that are registered for VAT, and this is a conservative view, 90% of them are not taking the full advantage of VAT. So there is what is called a VAT leakage. My actual personal view is 100%, because I've never come across one organization in my 20 years of consulting that are absolutely clean from a VAT point of view. There's always leakages happening. And the leakage generally is because of a number of reasons. And I think number one reason is lack of knowledge on the importance of VAT or the mechanics of how VAT works. Secondly, simple processing errors. And perhaps maybe third, non-compliance. I recently consulted with an organization who lost 11 million rand. And guys, I bullshit you not. 11 million rand over 11 years, and they didn't have a clue that they lost that money. And when sitting with them, the CEO, who was from a non-finance background, with the accountant sat there, and I told them, this is the money you've actually lost. She was horrified. The accountant also didn't even know how they lost that kind of money without even knowing it. 11 million rand, 1 million rand a year, real figures, guys. And this is the kind of leakage. Now let's turn this leakage into actual monies. Let's look at what it is. So if your organization is R1 million budget a year, that's losing out about 45,000 rand a year. And as you go up into a 3 to 5 million rand, you're losing approximately between 180 to 200,000 rand a year. Over a 5-year period, that's nearly R1 million rand. If your budget is anywhere higher, effectively nearly $500,000 rand a year being lost to VAT. So all the effort that's made by your fundraisers to bring in those monies into the front door is actually lost through the back door. Let's turn that leakage into actual impact. things that you know about. All of these costs are grounded from South African cost tables, and we try to be as conservative as possible. You're looking at 45,000 Rand a year. That's approximately 3,000 learner needs. Based on the NSP, National School Nutrition Program, which is a much lower rate, we've tried to use a much more conservative, higher rate. If I use their school program allocation cost per learner, that could go up to about 10,000 learners per month. Okay, if you're sitting around 130,000 Rand, that's textbooks. Jonas might know more about these cost numbers here, whether I've got it correct or not. But looking at the DBE's textbook per learner, about 250 Rand, that's 550 learners textbook. Up to 400,000 Rand, look at what you can possibly do. So guys, VAT recovery is not just theory. It's actually meals, it's water, it's food, it's program delivery, and it just goes on. Okay, let's look at a sector-wide impact. We've modeled two sets of independent data, and we've triangulated a base budget of 1.5 million Rand per NPO in the sector. Taking 1.5 million Rand as our base model, we effectively get, and guys, this is in Rand million, so that number we're looking at is 1.2 billion a year. So based on our base modulation, we've got 1.2 billion Rand a year being lost into the sector just on value-added tax. I'm not looking at the 9 other taxes that also affects organization, other than going to be here the entire day. But just on that, on a high scale, we have 2.2 billion Rand worth of VAT being lost to the sector. So there is a pot of gold at the end of Sarda's rainbow, guys. But how many of us are really accessing it? And this is why the topic of my discussion is tax benefit equals fundraising. Okay, so let's look at it. Now that we know perhaps the money is here, and don't take my word for it. Jonas has put already the marketing thing in front of you of how much we've helped his organization recover. What's the barriers that's stopping organizations from going forward? Freezing board, not being able to make this decision. Let's go through some of them. And the foremost one will be income tax or VAT exempt, whatever that means. Never come across that language in the VAT Act or the Income Tax Act as such. So we can't register. There's no organization that's income tax or rather VAT exempt. If you walk into Woolworths and buy a pair of shoes, you don't produce your PBO certificate to them and tell them, please do not charge us VAT. They will charge you VAT at 15% irrespective. Okay, so you're not exempt from that, you will be charged VAT on that. We don't make more than 1 million Rand. This is a common one, so we can't register for VAT. It's most probably your accountants told you, or somebody at SARS told you that. But there's a different set of rules that works for non-profits. And it's not based on how much money you're making. It's not based on whether you're earning rentals or income or other types. It's purely based on activities. And if you do certain types of activities, you will qualify irrespective of the budget that you have. VAT registration means extra admin. I'm sure most of you may be using accounting software. And guys, this is the reality. You will be submitting a VAT return every 2 months, not more than an hour at the maximum, even if you're possibly doing it the old-fashioned way using an Excel book. Okay, our spend is too small to bother. I'm sure most of you or none of you will agree with that now. Every million Rand will give you 45,000 Rand per annum back. Over 5 years, that's 260,000 Rand. Over 10 years, that's 2.5 million Rand for funding, perhaps unrestricted. Okay, and our accountants advised us not to. I think this is the most common one. Again, this is why I kind of put those, I'm sure you can see those emojis here. Okay, with all due respect, I'm also an accountant at heart, although I don't do accounting anymore. But let's look at it. We all understand from a medical fraternity point of view that you get specializations. If I've got a problem with the heart, my GP or general practitioner will be able to advise me to an extent, but after he's going to refer me to cardiologist, because that's a specialization. 3 opinions from an ophthalmologist on my heart will not count for 1 opinion from a cardiologist. You all would agree with me on that. So we understand it. Very similar in the accounting field. But unfortunately, we all think that our accountants know the stock market, they know how to buy and sell shares, they know what's happening in the economy, they can do accounting, they can do tax, they kind of know everything. No, specialization. If you most probably ask me a question about accounting, which I've not done in the last 20 years, I'm most probably going to get it wrong. If you ask me about financial statement presentations, I'm most probably going to get it wrong. So you have to ask the right person who specializes in the field. And your general practitioner, who 99% of his books are profit-making entities, He's not a specialist in the field, and it's very probable that you're going to get the wrong answer. With all due respect, it's just a specialization. So understand who you're getting the information from, and make sure you get a source from where the information is coming from. So that's quite critical. Okay, so we've got a few minutes left. Is it all lost? Not at all. And this is effectively, well, let's call it a marketing pitch. What we do as a firm is go beyond looking at what have you lost or what are you currently losing, to say, let's look at it, do an in-depth review of your organization. We call it EAR method, where we engage with your organization. We look at the activities you're doing. We benchmark these against the VAT Act and what benefits are from a VAT point of view. We also do income tax, we do SDL, there's a number of different taxes. From there, we analyze all your expenditure. So we've got a system called the cash detect system, whereby we push everything into the system. The system automatically analyzes every transaction based on every activity, based on every VAT benefit there is in the sector, and it pops out, generates to us all the benefits that you're entitled to, and then we recover those monies on your behalf. We walk through the door, through to SARS, because that money is your money sitting in SARS coffers, and we reclaim those monies back to you. Now imagine, just in the last 6 months, for one organization, we've claimed back 22 million rand, going back for the last 5 or 6 years. Now can you imagine what 22 million rand will do to your organization? They've put it straight, a portion of it into an endowment fund to start generating investment income, and the rest was used to do a number of different capex activities. Like this, there are so many organizations that did so much more. Ask Jonas about it as well. That money comes in, and most of the time it's unrestricted core funding, money that you never thought you had. And then we empower you. That's quite important. We show you all the tricks in the book. We show you exactly what you need to know in terms of VAT legislation. So going forward, you are not losing out money. Because it's very hard to organize where all our efforts from a fundraising point of view are bringing those monies through the front door, but we're losing out all of those money going through the back door. Okay, so I think my final message to you is let's turn tax into impact. Let's not look at it as compliance, as a headache, as something that we just need to get out of the way. Because you can see from my presentation, those monies have direct impact on the program and the delivery that we do. So I've got about 2 minutes. I think I've budgeted my time for 12 minutes, and I'm just within the time. Excellent. Thank you, guys. Wanted to...
Yeah, thank you very much. We have 2 more minutes. Maybe you could just give us an idea. What are the other tax benefits that are out there? You just give us the bullet points so that we.
Okay, very quickly. So there's about 10 different taxes that impact your organization. So remember, guys, you are playing in an economy where profit-making organizations are also playing. So you're not sitting in an isolated bubble. So like they are incurring taxes, income tax is a tax. Now many of you or many organizations feel, but we exempt from income tax. That's a myth. If you go back and read your PBO letter, it says you are exempt from income tax to a certain extent. You do not operate in a fully income tax exemption space. You are what we call in a partial taxation. That means for certain income streams you're exempt, but for other income streams you're not exempt. Now what happens here is you see 2 extremes. Some people absolutely don't know this, and they don't pay any income tax, and then SARS hits them with penalties, liabilities, understatement, interest, and all of that. I went right up 2 years ago, right up to High Court with a matter of 650,000 and just on the penalty of an income tax, which we were disputing. The SARS, the tax exemption unit, took it up right up to High Court. My client couldn't fund it anymore, and they said, let's come to a compromise with SARS, purely because they've got the income tax law. Like this, many others are saying too much of income tax. They feel that we need to pay income tax like a normal business, and they pay too much. So income tax is a big one. Then you get something like SDL. How many of you here pay skills development levies on a monthly basis? It's perhaps you don't need to pay that. But there's legislation that says that depending on the type of activities you're doing, you don't have to pay SDL. We've had a client who lost about 1.2 million rand over a 10-year period in SDL. And we've managed to successfully go back and claim it back from SARS. So like this transfer duty, like this capital gains tax, how many of you have brought property and perhaps maybe there was no transfer duty payable, or you paid transfer duty where you shouldn't have paid transfer duty, or you were not charged VAT, but you still could claim back VAT. There are a number of transactions to go through that no VAT has been charged. And an organization will tell you, but we haven't paid VAT, how can we claim back VAT? Yes, you can claim back VAT. So there's a number of dispensations because you are a non-profit organization and based on the activity level that you can claim back. That's my 15 minutes. Okay, so guys, we'll be here for the rest of the afternoon. I'm quite happy to chat with you all, or even if you have a consult after that, at absolutely no charge, just to get a feel of what you can do. It's really hard to, and this is why I say there is a pot of gold at the end of Stars of the Rainbow. We need to know how to access that pot of gold. Thank you.